Hi, I'm Jenny Brown. Welcome to MFB News. I hope you're keeping really well. All fine here. The unpacking is now largely done. Decorating is fully underway. If I never see a roller in my life, it will never be too soon actually. But I hope everybody's doing really well. In terms of what we've got for you this week, we've got some news of several rate increases. What we're also going to do actually is, interestingly, Lender has introduced a 10-year fixed rate, which is very good. And I wanted to talk to you a bit more about 10-year fixed rates. So what are the benefits, and actually what are the pitfalls as well? Why don't landlords always take 10-year fixed rates? There's a lot more chatter around the benefit of 10-year fixed rates, particularly as we're in an environment of increasing interest rates. So people looking to shield themselves from those increases. So we're going to just delve into that in a bit more detail. We've got a couple of other new rate releases just to cover off with you. Then we're going to talk a bit more about interest rates more broadly, what's going to happen for the rest of this year and into next. And then we're going to cover off some information that's been released with regards to rental yields across the country. Okay, so first of all, as predicted over the previous weeks, and I'm sure it will come as no surprise to you on the back of the base rate going up last week, we've seen a flurry of rate increases. Now, I was going to sort of go into them in a lot of detail, but I think that would actually be quite boring for you, so I'm just going to give you the kind of headline. The Mortgage Works, NatWest, Accord, TSB, Skipton and Platform Home Loans have all increased rates in the last week. We've also seen some of the nice limited edition products that we've mentioned in previous weeks get withdrawn as well. Now, a limited edition product is where a lender introduces a new deal which is kind of outside of their standard product set, which is released for a limited period of time. It tends to be very keenly priced, i.e. a little bit cheaper than the standard product set, and they release this for a limited period of time and then it goes again. And what we've seen is a bunch of these get withdrawn in the last week. Now, in terms of the increases that we've seen from these lenders that I've mentioned, so first of all, they've varied in terms of how much the increases have been, but they've been up to 30 basis points, 0.3%. Now, I think what's interesting here is if you think about the names of the lenders I've just given you, these all tend to be sort of high street institutions, clearing banks. So the Mortgage Works is owned by the Nationwide, NatWest, Accord Mortgages is part of the Yorkshire Building Society, TSB is obviously a bank, Skipton, Platform Home Loans, they're all kind of platforms owned by the cooperative, by the way. So they're all part of the kind of high street set. The reason these guys are putting their rates up and we're not seeing the specialist lender names coming up here, it's going to be really due to two things. So first of all, these lenders have slashed pricing in previous months so low that they cannot afford to take any further hits in terms of margins. They simply have to put their pricing up, otherwise they're literally losing money as they're lending it to you guys. They just cut their rates so aggressively previously. They have nowhere to go now and they have to put their pricing up. The other thing here is if you think about how these guys are funded, so essentially what they're doing is they're taking money that is invested into their institution from savers and then re-lending it out to you. With base rate going up, they simply have to increase their savings rates, the interest rates they're paying to their savers. So to compensate for that, they're going to have to put their mortgage rates up as well. So that's just really what's going on there. And like I say, this is now a bit of a theme at the moment. We don't expect this to go away, and I'm sure there'll be more of these in the coming weeks. Now, LendInvest have released a 10-year fixed rate, which is available for personal borrowing and also limited companies. Now, on their 10-year fixed rates, the pricing starts from 3.09%, is available to 75% loan to value and loans of up to £1 million. Now, when I say the pricing starts from 3.09% is for green properties, so EPC ratings of A to C, and then the pricing will be slightly higher for non-green properties. Now, in terms of LendInvest as a lender, a specialist lender, they have great lending criteria, so no maximum number of properties in the background, no minimum income requirement unless you're borrowing 80% loan to value, which this 10-year fixed rate isn't available for, so it's no minimum income requirement for this particular product. Maximum age application is 80. They do allow 10% overpayments, which not every specialist lender can cater for. They do remortgages within the first 6 months of ownership against open market value. Some other niche pieces of lending criteria: if you've got a leasehold flat, the lease needs to be 70 years or longer at the point of application, no lower than 65 years at maturity of the loan. So if you enter them with a 71-year lease, essentially the maximum term of the mortgage would be 6 years there. That's not bad actually in the market. Now they can consider new builds, they can consider ex-local authority properties and flats over commercial subject to valuer's comments. So this kind of echoes back to what we've talked about in previous weeks, with lenders who say they'll lend on properties over commercial and indeed actually any property, but this is more kind of poignant when it comes to commercial properties. Lenders will say, well, look, okay, we can in theory look at this, but if the surveyor goes out and says, look, because it's above, I don't know, a Chinese takeaway, there's going to be very little resale demand for this. If we had to repossess the property and sell it on, you're going to really struggle to offload it, then the lender's going to step away from it, okay? So the valuer ultimately always has final say in these things. Now, in terms of 10-year fixed rates more broadly, so look, we have a load of people suddenly asking for 10-year fixed rates. Understandably so, in an environment of increasing interest rates, the ability to lock in for a really long period of time and simply not have to worry about it is obviously incredibly appealing. Now, the lend invest rate in the limited company space actually is very competitive. It's the lowest 10-year fixed rate, particularly if you've got a green property. But in the personal space, actually 10-year fixed rates do start from 2.09% with other lenders, so that you can get the pricing right down from there. So 2.09% to fix in for 10 years is really, really very good. So the benefits are obviously that we're locking in an interest rate. We're going to be absolutely shielded from what's going to be a fairly bumpy ride with interest rates over the coming few years. You don't have to remortgage every 2 or 5 years, so you're going to save yourself a bunch of money on potentially arrangement fees and other costs. There's lots of good things going here. So why aren't more people taking 10-year fixed rates? Now, I think the first thing to say is that when you take a 10-year fixed rate, you tend to lock into the deal for 10 years. And I think landlords tend to prefer an element of flexibility to allow them to kind of change their plans. So a lot of landlords will not want to lock in for 10 years because they may want the flexibility to sell the property. Additionally, they may want to be able to remortgage and raise money out of the property. So it's very, very standard for landlords when they come to do a remortgage to capital raise and use the money that they've extracted from that property to invest as a deposit in a new property. So actually locking that money away for 10 years does put people off. And there are a couple of points to note here. If you have a mortgage, your lender may be able to offer you a further advance, which is like essentially a top-up loan. Now, not every lender offers these, but a lot of them do. So if you are thinking about a 10-year fixed rate, but you're also thinking, well, hang on a minute, I may want to get some money out of the property in years to come, one of the things you really do need to consider is whether the lender that you're approaching will offer you further advances. So as an example, Lend Invest at the moment do not do further advances. So if you lock in with these guys for 10 years, unless you're willing to break the deal early and pay a fairly onerous early repayment charge, you won't be able to access any additional money from them during that 10-year period. The only option which may be available to you is to apply from a second charge from a totally different lending institution. Now that is possible, but just note the interest rates on these second charges are much more expensive than normal mortgage lending rates. So just keep that in mind. Now the other thing is portability. So if I sell my property, for whatever reason, and I want to buy a different buy-to-let property, can I port the mortgage across? Now, again, some buy-to-let mortgages are portable and some are not. So the Lend Invest product, which is, like I say, it's a really keen rate in the limited company space, it's not portable. So ultimately, this is a really, really solid commitment for 10 years. There are other 10-year fixed rates in the market which are portable. Now, portability in itself is something which is quite interesting. So essentially what a portable mortgage is one where the lender will allow you mid-product term to take the existing amount of money that you owe and move it across to a new property on the same interest rate without paying any early repayment charges. If you need to borrow additional money to sort of balance the books and afford the new property, then that will be on a further advance rate. And likewise, if the property that you're buying is cheaper and so you're going to knock a lump off the mortgage balance, you may incur early repayment charges. But the thing which I think people aren't aware of is people naturally assume that if the mortgage is portable, you simply move it across. It's very straightforward. The reality is that actually lenders will re-underwrite the loan as if it were a new mortgage application. And we see this particularly become an issue on residential mortgages, where to be very, very stereotypical, husband and wife both working, buy a property together. Then wife stops working because they've had children. Sorry, this sounds really sexist, but this is kind of what we come across quite often. So wife stops working, the income drops, couple want to move into a different property, they want to simply move their mortgage across to a larger house to accommodate for their growing number of children. but wife is no longer working, the lender won't actually then see the mortgage as affordable because of the reduction in combined income, so they won't let them port it. So just know that if you are looking for portability, it is subject to full underwriting as well. So look, that's the kind of pros and cons of 10-year fixed rates, which I hope help. Invariably, when people phone us up and are looking for 10-year fixed rates, they will cost up a 5-year fix and a 10-year option as well. And naturally, money talks, and people tend to then ultimately swing towards the 5-year fixed rate. But like I say, there are some really keenly priced 10-year fixed rates on the market. So, you know, it's definitely worth thinking about one of these if you are in the market for a mortgage at the moment. Okay, a quick trolley through the other pricing changes this week. So Paragon have released 4 new products which are available for 50% and 60% loan to value within their portfolio range. Their portfolio range is available for limited companies, HMOs, multi-units and landlords with more than 4 buy-to-lets. The pricing starts from 2.67%, free valuations, no application fees and £750 cash back. And these are available on both purchases and remortgages as well. So really keen products coming in at the lower loan to value set there from Paragon. The mortgage lender have also made some pricing reductions and their rates now start from 3.13%. The Coventry have also reduced just a couple of their products by 14 basis points, and Vida Home Loans have brought out a couple of limited edition products for standard HMO properties, which do offer a saving on their current product sets. This is limited edition, so as I mentioned previously, the pricing does tend to be keener. Having said that, while the rates are offering a saving on their current product range, they're definitely not market leading, so I don't think there's any merit in going into those in too much depth. Okay, brief update on interest rates and predictions on that. I'm sure everyone's sick of hearing about inflation and interest rates at the moment, so I'll keep this brief, but I do think this is important that we stay on top of this. So first of all, CPI inflation forecasts have been revised and increased upwards, and the expectation now is that inflation is going to peak in April at 7.5%. Now in terms of interest rates and how that kind of shakes out from there, we're expecting the MPC to hike base rate to 0.75% in March, and then increase it further to 1% in May. So that's another increase next month, and then another one 2 months later. But then we're not expecting it to go any further for some time. However, when you read the committee's updated central projections, they're now showing that base rate will have risen to around 1.5% by the middle of 2023. Some more increases would be on the way, just not imminently. Now, interestingly, looking at the notes from the MPC meeting last week when base rate did go up, there were 4 members who were actually pushing for a larger increase than the one that actually went through. So I think really what this shows is that within the committee there is some misalignment in terms of what they think should happen, and therefore actually while these projections are useful, just know that actually nothing is set in stone, and actually the increases that we do see do have the potential to, the rate increases that we're predicting do have the potential to actually be higher than those which I've just set out for you. Should we have some good news now? The average cost of rents across England rose during January, with averages hitting £993 per property. This is according to Good Lord. So this is up from an average of £985 in December and marks the highest rental averages recorded since October 2021. The biggest increase was seen in the northeast, with average prices rising by 3%. Average cost in the region rose from £716 per month to £740, and this was followed by a 2% increase in the cost of rents in both the East Midlands and also the North West. Now, interestingly, the average void period in England rose from 18 days in December to 20 days in January, which is a rise of 11%. Now, while this is an increase, actually, this is still a very, very low number. Comparatively, in January 2021, the numbers are 16% lower now than they were this time last year. Now, Tom Mundy, who is the COO at Good Lord, has released some commentary around this. And what he's saying is, look, we wouldn't expect to see record-breaking low voids during January, particularly in light of the huge market activity seen in December. So the small increase in void averages we're seeing this month is not unexpected. The overall market picture is still very strong compared to 2021. landlords won't be struggling to find tenants to cover the coming months, but the rising cost of living may start to affect certain regions sooner rather than later. So I think really there's probably a word of warning in here that actually things are looking really, really good for landlords at the moment. Rents are going up, the average void period is still very, very low, and things are looking very rosy, but just be very mindful of the fact that actually with the rising costs of living, actually people will have less money to spend, and this may ultimately impact on the rental market at some point later into the year. That's everything for me this week. Thank you as always for joining me. I hope you found that helpful. If you do have any questions, we would love to hear from you. 0345 345 6788, or have a look at our website, mortgagesforbusiness.co.uk. I have to say, just in terms of what we're experiencing as a brokerage, remortgage activity is absolutely rife just now. So many people are looking to booking on those nice low rates that we've still got at the moment. I'm obviously very concerned that actually, things are going to go up. In terms of opportunity for you here, excuse me, look, so the kind of timings on this, so it takes roughly 3 to 4 weeks to obtain a mortgage offer. A mortgage offer can then be valid for up to 6 months. So in theory, once you've got the offer, you've got a further 6 months on which to draw down the funds. So really, if you apply for a mortgage today, so we're in February, in theory, you have until now September to draw down those funds the 9th month of the year. So actually, if you are in the need of a remortgage at any point between now and September, it really could be worth you having a look at your options at this moment in time to lock in for a rate rather than leaving it until August and then being disappointed that the cost of rates has gone up so much. So there you go. But look, as always, give us a call if we can help. We'd be delighted to. Have a great week, a great weekend, and I'll see you again next time.